Hey, JJ here again with The Art of Value. This is episode 77. So today I'm going to talk about Jamie Dimon says brace yourself for an economic hurricane. Wall Street warns that the rally might not last. It might be a bull trap, and retail options trading's dropped way off recently. Emerging tech stocks rallied hard today, even though the bad news was around. And one China tech company I've been talking about quite a lot recently has been climbing the wall of worry, and it's up over 100% since the March low. Okay, if you're on Twitter, I'm putting this first clip on Twitter, just the first few seconds, and so click the links in the tweet if you want to see the full episode. And if you're anywhere else, subscribe and like on YouTube, and this video also on Spotify video, and there's audio everywhere else, and join me on Twitter at The Art of Value. All right, let's get into it. So this is what Jamie Dimon said that kind of rocked the finance world. You have to realize, if you don't know, Jamie Dimon's probably the most famous well-known bankers in the world. I mean, can you name another banker? Well, you probably can if you're into finance, but he's definitely the most well-known head of JPMorgan. So let's see what he says.
It's a hurricane. Right now it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy Sandy or Andrew or something like that. And you better brace yourself.
Okay,
It's a
that's
hurricane.
Go away.
Right now it's kind of sunny. Things are doing fine.
That's enough, Jamie. That's enough. We get it. We get the warning. Okay, so yeah, he was quite optimistic not too long ago, and suddenly he's incredibly bearish about things, it seems. So what do you think the market would make of this? I mean, he's got a lot of clout. You'd think the market would be down today, but it was not. And so let's see what else we've got. Yep, so the headlines, look at these headlines. On Reuters, Dimon says brace yourself for US economic hurricane due to inflation. And Jamie Dimon says brace yourself for an economic hurricane caused by the Fed and Ukraine war. There are two main factors that Dimon worried. So-called quantitative tightening, or QT, is scheduled to begin this month and will ramp up to $95 billion a month in reduced bond holdings. And the other large factor worrying Dimon is the Ukraine war and its impact on commodities, including food and fuel. Oil could hit $150 or $175 a barrel, he said. You'd better brace yourself, Dimon told the room of analysts and investors. That was his audience. JPMorgan is bracing ourselves, and we're going to be very conservative with our balance sheet. So as I said, you think the market would be down, but look what happened today. We had S&P 500 1.84% up, the Dow 1.33%, the Nasdaq 2.69%, and the Russell 2.31%. So the Nasdaq and Russell being the small cap index, which I've been kind of following more closely. So I have small caps, and I think that they'll be the first to turn down, the first to turn up. I'm not saying that's turned up permanently, or I mean not permanently. I'm not saying it's on a bull run yet. Could be a bear market rally, as I said. So this is the headline. Don't get too excited about the stock market's recent rally. Some Wall Street experts say it could be a trap, and the bear market will still wreak havoc. The stock market is suddenly up, or is it? Equities whipsawed through the month of May as investors contemplated falling economic projections and less than stellar earnings forecasts from retailers. Despite the bearish news, ongoing volatility and consistent predictions of an impending recession, the S&P 500 ended the month roughly unchanged after mounting a recovery in the last few weeks. The rebound has some on Wall Street arguing that it's time to be opportunistic, and buy beaten down names that still possess strong fundamentals, but not every investment bank is telling its clients to go and buy stocks. So, yesterday I was talking about Howard Marks saying that they're buying, and that it's more, there's some bargain stocks in quite a few areas. but he didn't go as far as say that it's the bottom or anything. He said in 6 months, if it's down more, we'll buy more. That's kind of like, I mean, some people would say say catching a falling knife, but if it's cheap, it's cheap, and if it gets cheaper, it gets cheaper. So it's buying and buying. Another sign that I talked about that I said was call this tweet here. If you're on video on YouTube or Spotify video, you'll be able to see the graph. Call options trading among retail investors has fallen to the lowest level since December 2019, completely reversing the surge in activity since the pandemic began. That's from JPMorgan again. The graph shows it significantly. Pretty much the peak was January 2021. Not surprising, that was the peak of the emerging tech boom. All those kind of, say, the ARK portfolio of stocks typifies it. So it's gone down since then. Novices were getting into options. I noticed this quite a lot. People you couldn't lose. It was a way of making even more money, and now it's reversed. So yeah, let's get to the market. Some individual stocks, and what I wanted to talk about was China tech stocks, which I've been kind of observing. I have two of them, Baba and PDD, Pinduoduo. So they were up too, as well as the US. DD was up 4.95, Baidu was up 3.46, Baba 4.1, JD 3.96, PDD 7.49%. And Tencent up 3.13. This is on the US market, by the way, not Hong Kong. So what I said about this, I posted on an investment group online. Something going on a bit under the radar. Large Chinese e-commerce company Pinduoduo continues to climb the wall of worry after decent earnings on 27th of May, now 106% above the mid-March low. Can a bear market rally in a stock bounce this much? Yes, probably, but it's a lot, so the March low was really low. It took after being down a lot, it took a big dive, and it's kind of been sort of since mid-March. So, over 2 months, it's climbed 106%, which is pretty significant. It was really low, but the US stocks haven't climbed that much, and the China market was down before the US. Is that March, mid-March, and it's not just in this stock, it's in other stocks too, Barbara. A lot of them were that mid-March was the low point. I mean, it's hard to see it could go lower than that, because it was just incredibly low when there was so much pessimism and so much doubt, uncertainty. But is that the bottom? We just don't know. You can't predict, just like we can't predict the stock market having bad news. One of somebody with huge clout saying brace for a hurricane, but the stock market jumped. It's just unpredictable in the short term, isn't it? And so 106% up for it. And Alibaba's up 27%, which is not much. It's similar to some US tech stocks actually have bounced off the bottom that much. I don't say the bottom, but is it the bottom? We don't know yet. Jamie Dimon probably doesn't think so. So yeah, some of these individual stocks just going through. We've got Snowflake up nearly 10%, Nvidia up 6.94. So these are big jumps. Nubank 16%. What else is notable there? Snap 6.96 after that big Spotify, which I have 5.91%. Square, which I have 6.75. Pinterest up 6%. PayPal up 7%. Coinbase up 7.56. So there's a big moves in one day, considering the news around. Shopify up 10.33. I mean, that went down pretty low too. Where the CEO Toby was complaining that the stock market was underpricing it, and Kathy Wood's been saying her stock's a deep value, but as it's interesting, isn't it, that like CEOs and fund managers complain about market inefficiency when it's not going their way. When it's going their way, when there was like that back in that bubble, they weren't complaining about market inefficiency back then. Anyway, ARK was up 7.36. The ARK funds actually, ARK F up 7, and lithium stocks up as well. I see LIT, which is the ETF, is 4.3. And what else? You know, the EV stocks, the ones that probably shouldn't be up, Neo, Lucid, and Rivian up 6%. I mean, it's around 30, 31, $32. Should it be worth that? I don't know. Land, which is more like probably it's a farmland ETF, which is pretty much the biggest one, I think, up 1.52. So not so much. It was still up, but it's kind of more defensive. You know, when people were talking, when inflation warning, it's sort of been going up. I should check the graph for that. I had a look at it. I mean, farmland. Anecdotally, remember, I think Bill Gates is one of the biggest landowners, farmland owners in the US, isn't he? Is that correct? I don't know. Tell me if not. So interestingly, that some of these reseller stocks, like the Real up 13.51, Stitch Fix up 8, earnings coming out soon. They haven't had earnings, and some of the Stitch Fix has been beaten way down, and unfortunately, I own that. But I was buying on the way down, so it's not too bad, but still bad. And ThreadUp, which is similar, a marketplace for second-hand clothes, kind of in bulk, I think that one. So it's up. That was up 12. Poshmark, another one up 9. Marketplace for reselling clothes, and Etsy, similar. You could say it's in the similar category, but in the S&P 500, much bigger, up 7.85. And Farfetch again, luxury goods, 12.38 resale. And if we look at the big dogs in the index, it wasn't up as much. Like, I just looked through a whole bunch of stocks that are up nearly 10, 7, 6, 7, 8, 9, 10%, right, or even more. But the big stocks, the big caps, Tesla up 4.68. That was quite a big move, though. It's up quite a lot in recent days. Netflix 6.31. I mean, these are Facebook 5.4. And Amazon 3, the biggest of the big 3%, Google up 3, Microsoft only up 7.9, and Apple up 1.68. I think there might be worries with Apple in particular, like the PE price, the PE ratio is not low, and if Jamie Dimon's right, and there's a economic hurricane coming, people are going to be buying so many iPhones. Are they suddenly, Apple's not just selling to wealthy. It's not a luxury item. It's not a wealthy people. They're selling kind of. They're not. They're not cheap, are they? They're even at the lower level. But are people going to be buying? I mean, I'm wearing earbuds right now. Are people going to hold off on that purchase, even if they did a little bit? If sales, say, if Apple sales didn't grow at all, I think there'd be trouble for the stock. But that's just me, and this is not financial advice in any way. Just talking here, thinking through my own ideas. All right, that's all. That's all I've got for you today. And as I said, I'm just thinking through my ideas, and that's what I've been thinking today about the market. Anyway, not specific company analysis. I'll be doing that too today, but I'm not gonna. I won't. This is just about the market and a few thoughts I had in the morning my time, which I'm in New Zealand, not the US. Okay, so if you found any of this valuable, like and subscribe. Videos. I think video is the best way through YouTube or Spotify video now. I think Spotify video is pretty good format actually, and audio, of course, audio versions elsewhere. Apple's still big, more than Spotify actually, and it's audio still. And catch me on Twitter at the Art of Value. Okay, see you next time.